Hello friends, our fourth company in the consistent compounder series is none other than TCS. So TCS, as you all know, is the number one IT company in India. It's the market leader in the IT sector, and in the world it ranks at number 2 after Accenture. So the company closest to beating the leader in the world is TCS, which we can say have the raw material to be number 1 in the world as well. So I don't think I have to say anything about the management of TCS. It belongs to the Tata Group. It's a very renowned company with a very good brand known not only in India but all across the globe. And if you'll see the geographical concentration, TCS generate 52% of its revenue from America's client base, followed by Europe, India, and then the rest of the world. And this you'll see in all the IT companies, that the majority of the work that they do or the business that they get is from America and then Europe. And that's why you will see that the IT sector is not doing that great right now, because there are talks related to slowdown in America and Europe. That's why you're getting this company at a good discount right now. But once this problem is resolved, maybe in 1 year or 2 years, these company will bounce back. They have done it in the past a lot of times, and they have all the firepower to do it again as well, because without IT the world cannot move forward. And TCS, as you all know, is also known to pay heavy dividends to its shareholders. So it not only creates your wealth over the period of time, it also gives out good dividend to its shareholder. And here you can see their client base. The company serves some of the biggest conglomerates in the world like Google, Amazon, Azure, OpenStack, Adobe, Intel, Bosch, IBM, Apple, Oracle, Symantec, etc. So these are all big companies which are associated with TCS. Now we are at the chart for TCS, and in 1 year, if you'll see, it has given a negative return of 8.65. In 5 years, it has given a healthy return of 158%, and maximum pattern, if you'll see, it has given 2600% return from 2004 till now. And again, you'll notice the same thing related to the consistent compounder, that the chart pattern will go down from bottom left to top right. There have been dips earlier as well, but those were all the chances to accumulate these share, and you have seen that after that it has only gone up, and that is what this share is going to do. It is only going to do well, because for any economy to grow, IT is a very important sector. You can say this is the engine for any economy to move forward. So here you can see that TCS is on the top in terms of IT software sector, and its current CMP is around 3280, and it is down around 18%, so it's a good opportunity right now. And you can see its market cap, it's around 12 lakh crore, and it is the second biggest company in India after Reliance in terms of market cap, and the second biggest in IT sector is Infosys. And you can see that TCS is almost double the size of Infosys. But that does not mean, and I'm not saying that at all, that does not mean Infosys, HCL, these are bad companies. These are also good companies. Now let's look at the PLN of TCS, and you will see that the sales have been continuously increasing. It was 37,000 in 2011, then it increased to around 48,000, then 62, then 81, 94,000, 108,000, 117, 123, 146, 156, 164, and in March 2022 191, and in the last 12 trailing months it has crossed 200,000 as well. It is around 207,000. So you must have noticed that the sales have not dipped even once, not even during the COVID period. It has been continuously increasing. And similarly, you will see the profit as well. The profit in 2011 was 11,000. In 2012, it was 14, then 18,000, 25,000. Then it dipped a little bit in 2015 because the OPM dipped. It was 31 in 2014, and it dipped to 26% in 2015. And then in again 2018, it started picking up. It was 28%, and the profit increased to 30,000, then 32,000, then again a little dip because of the OPM, and then it again increased to 39,000, then 42, 46, 53, and now for the 12 trailing months it is around 55,000 crores is the operating profit. So you can see that being such a big company, also this company is continuously increasing its sales, increasing its profit, although there is a dip of profit for 1 or 2 years. But then that's why we say we have to give minimum 5 years to a company, to a good company, to give you good returns. And you must have noticed that in the third year the company has come back, and that's why we need to pick these type of companies with very good management who has the capability to bounce back and return to their peak. Now if you'll see the return profile, you will see that the CAGR has been growing close to 20%, not exactly 20, but it is 19%. So 3 years 19%, 5 years 21%, 10 year 19%. Being a market leader in the IT sector and being top 2 company of India in terms of market cap, this CAGR is also very good. Why? Because your risk in this company is very less. Risk obviously cannot be zero in share market, but in these type of company when we invest, we can be rest assured that our money will not go down to zero. It will recover, if not in 1 year, 2 year, within the period of 5 years, the company will eventually give us good returns. And these are the type of company which helps you be in the market. Because if you'll buy a company which you also don't have too much conviction, then you will eventually sell them if they go down. But these type of company who are well known, who are market leaders, who are consistently providing good returns, they also help the investor to stay in the market. Because once you spend that 3-4 years, because once after you're buying, because once you buy these kind of share and you have spent around 5 years, then you will not, then you just have to sit and see the magic of compounding. And if there is even a dip or a market crash, then the possibility is that your portfolio may not go down to negative, it will still be in positive. So this is the strength of this type of company. You'll see the other things also. Return on equity is also very good, above 40%, close to 40%, and sales growth, being such a big company, is also very decent. And similarly the profit growth, because for such a big company, even if there is an increase of 2-3% in the profit, that becomes a very big deal. And when the company is very small, then doubling the profit in every year is not a very big deal. But once a company reaches a stage where its market cap becomes very huge, then obviously the profit growth will not be that much high. So when we compare the profit growth and the sales growth with the size of this company, these are also very good percentage. And one more thing for this TCS company is, you'll notice that in 2019 the fixed assets of the company were around 12,000 crores, and now it has increased to almost 20. So almost doubled. Their fixed assets have doubled. And what does that implies? And what does this imply? It implies that company has done a lot of expansion. And why will a company do expansion? When they think that the demand for their business is going to increase. So hence they need to increase the capex so that they can cater to that demand in future. Now we are at the shareholding pattern, and shareholding pattern is decent for TCS. It will be around 22.3%, with promoter and FII hold around 13% right now. There has been a little dip, but still FII holds 13%, which is a good percentage. DIs hold around 8.53. You will see that DIs have increased their stake when FIIs have reduced. So from FIIs the shares have come to DIs, and the remaining is with public and some portion with the government of India. So we have checked everything for this company as well. It's a wonderful company to have in your portfolio. It will keep your portfolio stable, and consistently it will increase your wealth. Plus it will also give you a good night's sleep if you are invested in these kind of company, because believe it or not, sleep is very important for your brain to function properly. So that's it in this video. If you like the video, then do hit the like and subscribe button, or if you have any suggestion, then please feel free to mention it in the comment box. Thank you.